Yo, what's good, guys? Welcome back to the imbalance section. Okay, I'm eating my oatmeal right now. I just got back from the gym. But basically, I'm gonna go a quick little rundown on how I look for imbalance and how I trade it personally. So let's get right into it. Okay, so this trade up here that I had marked up, which was the 44, the 46R trade. Right? Let me delete this. Why did I have this marked up? I'll show you right now. Once again, right below the supply area, we had this imbalance, we had this gap. Okay, price wasn't efficient. It dropped way too quick. Left the gap in the market. These two candles on opposite sides of this down candle were not touching each other. There was no wicks touching each other. Therefore, it's imbalance. Okay, just like this. This is imbalance in the market. Price needs to come back up to fill it. What does it do? Comes back up, fills it. But the main point of this video right here in this section is how I look at the higher, a little bit higher of a time frame, you know, not too crazy, just the hourly, how I look for imbalance and how I look for, you know, overall sense of direction. So say we are right here, okay? Delete this. So we're trading back up. First of all, this huge imbalance right here, right? We need to trade into this. We need to somehow come down and start selling into this area right here. Okay, why? Because there is a huge gap right here that needs to be fulfilled. So what we look for sells. Delete this. So we drop down to the lower time frame. Okay. Also look for market structure on the higher time frame, not just the lower time frame, to give you a little bit more confirmation. So we wait. Perfect. What do we see? We see this on the 3-minute. We also have a huge gap right here. And we've also got this tiny little gap that starts right here that needs to be filled. Okay, start of the gap, imbalance, end of the gap, imbalance, the bottom of this supply. So we need to trade into the supply to fill this order, to fill all these orders, fill this inefficiency, these gaps, to then continue to rally down onto the higher time frame into this imbalance zone. Okay, so let's drop back down. And just like I did in the last section of this imbalance video, we wait for price to come back up into our zone. It's all just a waiting game. That's how trading is. So we wait. Let's go into the higher time frame, speed this thing up for you guys, because I'm not trying to hold you guys on this course for who knows how long, because I got a lot of sections to cover. Boom, price taps into our 3-minute supply zone perfectly, and price also fulfills this gap in the market. All this gap, okay, taps into our supply zone, and now we enter the trade. And now what we're looking for is to trade down. You could even have your TP down here if you want. So entry, stop loss, and the imbalance. So we wait, then boom. Okay, price has officially tapped into our imbalance zone, the gap in the market, and now this is where we left off at the end of Friday. It's Saturday right now. So as you can see, price perfectly traded up into our supply zone, and then traded right down all the way into that imbalance on the hourly that needed to be fulfilled. And now one more setup, just to show you guys quickly. What did we have right here? Well, what do I see right off the bat? I see the supply zone. Okay, we had a little trend line break. This is also an entry model that I'll be going over in the entry model section, or the entry, just the entry, yeah, the entry section. This is a good entry model. Okay, we have a channel going up and it breaks. So what do we look for? We look for the last up candle before the big impulse down. Here it was. We also had a gap sitting right below it. We've had gaps here that needed to be fulfilled, and we had gaps on the bottom that needed to be fulfilled. And we also had this double bottom, which counts as liquidity that we need to take out. This is price right now. Let's get out of this replay button. But as you can see, price came down, formed a little bit of some buy side liquidity right here. Okay, traded down, made a double bottom, barely took out the lows, came back up to fulfill all these gaps in the market, tapped into our supply zone to then continue down to take out all this down here. So that's basically it. I'm going to make this short and simple and sweet for you guys. This was the second imbalance video. This is how I go on the higher time frame to look at the overall buys and the overall direction, working with market structure, and then going down on the lower time frame to get my sniper entry to then trade back down into that imbalance zone. Now I'm seeing one more if you guys want me to do this. Personally, I wouldn't take this. Why? Because there is major liquidity sitting right here. But if you would have taken this, it would have worked out anyways in your favor. I wouldn't have taken this though. So, why would this be kind of valid? Well, simple. Right? We had the break of the channel. We didn't tap into supply yet, but we did form this little doji candle act as a supply. And we also had imbalance sitting right here, and imbalance sitting right here that needed to be fulfilled because it was inefficient price action. Boom, price taps into our supply zone, and this is literally just off the 1 minute, as you can see. 2.75 pip stop loss, and then we have a 41 pip TP, which that equals out to a 15R pretty much, and boom, look at that. Simple, sweet, right to the point. I'm not going to hold you guys here forever. This is basically it. Imbalance. I'll see you guys in the next section. Peace.